Join us as we explain the impact of the first budget of Prime Minister Narendra Modi's third term.
Your investments, your future. Watch how the budget drives India's Atmanirbhar markets.
From taxes to healthcare, from Manrega to Ayushman Bharat, we bring you all the policy moves.
Get expert insights on how Nirmala Sitharaman's 7th budget affects your finances.
Decode the big numbers and the new policies shaping our nation's future. Tune in to Business Today for Modinomics 3.0 live on Budget Day.
Presented by ICICI Direct, banking partner PNB.
Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching Modinomics, our special budget series where we've been talking to many leading lights of Indian industry, economy and government. As India prepares for the 7th budget under Finance Minister Nirmala Sitharaman, and that is going to be a record, expectations are high on what steps it will outline both on the macro as well as many sectoral steps and initiatives that it may choose to take. Joining us on the show to discuss the expectations that he has from the budget is Yashish Dahiya, the Chairman and CEO of pbfintech. Yashish, warm welcome to Business Today Television. Hours on the clock ticking away to the budget presentation. The economic survey has come in and the key headline that it gives is it's been in some ways conservative and cautious when it comes to calling out the prospects of GDP growth in the current financial year, pegging real GDP growth in FY25 at between 6.5 to 7%, and that by some estimates seems to be quite a conservative number. I'll start off from there, and from your perspective and your pulse on the economy, how is this current year shaping up from a macro and business perspective for you?
I think overall we are seeing good growth. Both the industry and us are seeing good growth. However, that is more a testament to how important insurance is and how much customers are starting to realize it. Overall, affordability is a big question mark. So we hear the word affordability a lot more than we used to hear it before. Whether that's price rises, whether that's just people struggling a little bit with their bills at the spectrum. But at the same time, the growth continues primarily because it's such an essential product that being without insurance makes life very difficult for a middle class person.
Absolutely, and the impact of inflation that has had an impact on spending is perhaps visible in the sector that you also know so well. Just before I move on, a quick data point if you could share with us, which part of the insurance segment is feeling the pinch of the overall crunch that we are seeing in consumer spending?
Yeah, I think health insurance is both an essential item, and over the last 2-3 years the prices had moved up a bit. So the customers increasingly speak about affordability there, especially if somebody's had a policy for 10, 15, 20 years and then the prices are increasing very sharply for them on existing policies. That has become an area of concern for people.
Okay, you touched upon.
But that said, the renewal rates continue, the growth continues. So what I'm saying is, it's almost like if your electricity cost goes up, you don't stop your electricity. So, but at the same time, the pain is felt.
Absolutely, and one tries to conserve, but given the nature of insurance, that may be a very different thing. You mentioned affordability, and I want to take that point in detail with you. Although it's a matter for the Federal Council, the GST Council to determine, but for years after the implementation of GST, a lot of people, including the top bosses of many insurance companies, as well as LIC, for example, have told me on record that as far as GST on insurance is concerned and the renewal premiums, this is something that needs to be looked into. Have you also...
I totally agree, Siddharth. I think specifically when you talk about health insurance, term insurance, such critical savings, protection products and such critical social fabric protection products, I think out there relaxation on GST would be very welcome. Also, when you talk about products like annuities, see, annuities are largely bought by people who are trying to create a pension for themselves. And I think some kind of parity with the NPS would be very helpful to give a fillip to annuities as well.
Yashish, when we speak to people in government, they say from a sort of government priority concern, the government runs both at the center and state governments as well run large insurance programs of their own which are straight from the budget. Their effectiveness is not a subject matter that we are debating, and therefore the insurance sector and private insurers are being seen as a revenue source as well. Do you think this thinking needs to change as far as the government policy makers are concerned?
See, I think there are two facts about India. One is we are a very diverse economy. So you have lots of large parts of population who are extremely well off and at the same time who are not so well off. And I guess the government has a responsibility to take care of some part of it. And the government is doing that very well. Whichever are the vulnerable sectors, they are taking care of that. However, there are a lot of people at the cusp. Taxpayers, people earning about between 100,000 rupees to 200,000 rupees a month, that sounds like a lot of money, but those people are also facing the crunch. These are, what you would call marginal taxpayers. And I think somewhere some level of support is required there. And they are a bulk of the insurance buyers. If you really think about it, who buys insurance? It's mostly that group of people. There's about, 200, 300 million people there. And they are the primary buyers of insurance. So somewhere they are self-purchasing, but they do need support in terms of tax breaks, etc., which is, I think, which is in a way, I would say, lower cost for the government than kind of taking on the entire cost by itself, right? Giving a tax break is probably a lower cost.
Absolutely. What if you had the chance to either advise the government or help them design, government insurance for the masses in India, what tweaks and strategy would you suggest?
See, there is a fact, again, Siddharth, that we have to face, and that is going to be the fact of India for the next 20 years. Our middle class is a very small percentage of the overall population. So if you speak about any developed country, they would have about 60 to 75% of their population in the middle class. We end up having about 20%. And this is, in my opinion, the big difference between a developing nation and a developed nation. Until that stays the situation, the middle class earns a lot more than the national average. And thus, a government will almost always be able to take care of the national average. But, anywhere in the world where somebody starts earning 4 or 5 times more than the national average, the government cannot support them too much because from their available funds. And I think the most of the developing world is in that special zone where the middle class itself earns 4 to 5 times the national average.
Okay, that's an important point. Regardless of what's been happening in the recent past, what's your outlook for the insurance sector? Which segments do you think have significant potential to grow further from here on?
I ask people a very simple question. What products would they buy for their own families? And almost everybody says health insurance, term insurance, and then pensions, and then maybe some planning for child education. right? So I think it's crystal clear which products need to be supported. And the only reason people may not be purchasing is either affordability or lack of confidence in the service delivery. But otherwise, those are the products and we have to support them. And I would say even today, term does not have a specific carve out. See, term comes under the overall ATC, whereas it clearly should have a carve out. I think in terms of premium comparison, term is very small compared to savings products. And having a special tax carve out for term is very essential.
Okay. A special carve out. So do you think ATC will be expanded, or the government which has now been...
I think it's time, Siddharth, for us, specifically since you asked me if I was to advise, that risk products and investment products must be considered separately. See, investment products are in line with mutual funds, are in line with fixed deposits, are in line with NPS. But risk products are a very specific category where the customer does not receive anything back in case they do not have a claim. And I think these products need more encouragement if we want to, and these are the products that support the social fabric of the country.
Absolutely, and that's a very good point. As a follow-on to that, how do you see this stacking up against the government choosing to push a zero exemption, zero carve-out, new tax regime, where the government is saying, hey, we'll let you take some extra cash home, but we are not going to give you any exemptions. And that effort has started a few years back. It's still work in progress. Do you think in the long term it's going to impact insurance and other sectors where exemptions have had a role to play for adoption?
See, I think the government has a choice. Every government in the world has a choice. They either encourage a particular action by the population or specifically in social areas, they fund it. And I think for a large part of our population, I would say almost 40% of our population, encouragement is a better route than paying it, because through paying, see, practically the country is at $2,500 per capita GDP and the middle class is at 10,000. So practically, you cannot fund the aspirations of $10,000 with $2,500.
Correct.
And so I think it makes sense to follow a combination of support and encouragement. And I think the middle class would be better served if and I've seen a lot of examples of this in Indonesia, where the government actually tried to do the entire piece. You struggle to meet the aspirations of the middle class, because the middle class has a certain expectation of the cost element, which then the government at lower income levels for the average country is unable to support. And that's just the reality for the next 20 years.
That's a fair point there, and I hope the policymakers take note of that very important point and distinction that you make. Let's move on from insurance and talk to you as a startup. One of the expectations in the run-up to the budget is the removal of the angel tax. Do you support this demand?
I totally support it. I think we as a country need to start following a smell test, that is a spirit test, rather than just the letter test. I know our laws are designed in letter. Intel Capital or a Tiger Global or a capital investing in India versus an individual who is putting their own money back or round tripping, etc. They need to be called out. A spade needs to be called out as a spade, rather than just following the rules and trying to draw very clear distinctions and every time throwing the water with the baby, we're throwing the baby with the bathtub. I think that is a very important thing, a change that we must make, because we are a diverse country, and for every rule we relax, somebody will try to take advantage of it. And unless we take a common sense view to this, it will cause difficulty. So angel tax should go, because startups need investment. Startups are encouraging growth, and so many startups have done so well and created so many jobs. Unnecessarily harassing those people for taxation on investments, I think that can be different.
It's interesting, this demand, because it's been around for quite a few years, and we've seen a funding winter that occurred as far as startups, and that impact being felt across the board in India. Only the best startups with proper revenue runway and profitability roadmap have managed to overcome the crunch. Do you think now would be the best time to remove this angel tax, because it would send a very positive signal and once again fulfill the government's own aims of Startup India?
I think it just makes life easy for everyone. And see, eventually, it was just an investment, and it was a fair investment made in the expectation of growth. And I think that just needs to be encouraged. So I think it's the right time to do away with angel tax.
Okay. And the government and the taxman has options of ensuring that it makes the levies whatever is due and legitimate. There are other ways to do that. Let's move on.
Absolutely. I think, as I mentioned, we do need to start looking at our overall law framework and start taking more of a commonsensical approach to it, which I think the government is increasingly doing, and rather than just a rule-based framework, because I think angel tax can be smelt from a far distance. There's no difficulty there.
Absolutely, no difficulties there. It's only a question of political will to remove this irritant. Let's talk about the broader fintech sector. A lot of startups created, a lot of expectations, many good business models, many which have fallen by the wayside. But one of the key differentiators in India, and that has led to a lot of adoption also, is technology, and that's why it's called the fintech sector. How do you see the demand for a streamlined regulatory framework been made for quite some time now? Have we made some progress, and do you want more to be made?
I think there is certainly progress. Every regulator is taking a commonsensical approach to things, and they are supporting technology. I think as a regulator, there are also responsibilities from a compliance perspective, which there cannot be a huge amount of difference between player A and player B doing the same thing. So I guess that is also being implemented, and I think it's normal, because somebody innovates and then regulation takes a bit of time to catch up, or sometimes regulation comes first and innovation takes a bit of time to catch up. But I guess the direction has been quite clear, whether it is from the RBI or from the IRDAI or from the SEBI. The directions have been fairly clear and consistent.
Okay, as we wind down this conversation, Yashish, I want to ask you, we spoke about removing angel tax, but when it comes to the middle class, and you put that very nicely in context, the number of people, what is truly the Indian middle class and the burdens that it has, would it make sense to reduce the overall income tax burden? And if that were to happen, do you see any rub-off benefits for greater insurance adoption, for example?
See, I would be prone to say yes, but I would caution myself there. India still needs the money. And there is actually nobody else who's going to provide the money but the middle class. You can't expect the money from the below middle class. So I think the middle class has a pretty tough time. While they have the opportunity of India, they would essentially be paying taxes and not seeing a huge amount in return for their taxes. And I think that's a sacrifice all middle class has to make in the developing world. It's a harsh one, but that's the reality. Now, but that doesn't preclude us from encouraging certain behaviors. Things we think the middle class should be spending on, whether it's insurance, whether it's investment, whether it's savings, encouraging those behaviors and discouraging different behaviors. So if, for example, we believe options trading for the middle class is a potential nightmare that could trouble everybody, maybe that part needs to be taxed more. Or maybe the per transaction cost needs to be increased so people don't do it. Because sometimes they're doing it out of their own. So you understand what I'm saying, right? So there is ways in which you can encourage and discourage behavior. I wouldn't call for a blanket reduction in taxes because eventually the money does have to come from somewhere.
Absolutely, and it's interesting you mentioned F&O, for example, because just in the past 4 or 5 days, we have heard both the Reserve Bank of India and the securities regulator speak in very stark terms about this. And the economic survey today has also spoken about this issue. Many bank bosses are talking about the decline in trend they are witnessing in deposit growth. And when I ask people this question, somebody just told me the other day, well, then the banks should be raising their fixed deposit rates that they pay long-term depositors.
Some things you only learn with maturity, they never end well. So, F&O for a non-qualified investor, in my opinion, it's very unlikely it's going to end well. So I think that is where it becomes government responsibility to sort of, I just took that as an example of something that should be discouraged, and insurance is something that should be encouraged.
Absolutely, and we'll have to wait and see what the budget does. Remember, viewers, it is a revision of interim budget that has already been presented. It's a budget for the remaining 8 odd months of the financial year. So we'll also have to temper our expectations to some extent, but some of the very good points that Yashish Dahiya here has made, I hope they are listened to, if not in the budget, but in other policy making events that take place. Yashish Dahiya, thank you very much for your time with us today. With that, it's a wrap on this conversation. We'll be back with more. Until then, goodbye.
Join us as we explain the impact of the first budget of Prime Minister Narendra Modi's third term.
Your investments, your future. Watch how the budget drives India's Atmanirbhar markets.
From taxes to healthcare, from Manrega to Ayushman Bharat, we bring you all the policy moves.
Get expert insights on how Nirmala Sitharaman's 7th budget affects your finances.
Decode the big numbers and the new policies shaping our nation's future. Tune in to Business Today for Modinomics 3.0 live on Budget Day.
Presented by ICICI Direct, banking partner PNB.